Let's welcome in Nilesh Shah, MD and CEO at Kotak Mahindra AMC. He's joining us on the show this morning. Nilesh, very good morning to you. It's been a hectic weekend for everybody. Your first take on the budget, was it enough or the sentiment is negative, but nothing that negative came about in the budget, though the expectations were riding really high?
I think from a market point of view, LTCG exemption not being restored and DDT getting shifted from company to recipient probably created a disappointment. From an economic point of view, growth is a function of government expenditure, consumption, investment, and trade balance. On the government expenditure side, 0.5%, which is maximum available limit under FRBM, that's been utilized. So government expenditure is at its peak. On the trade balance side, clearly they have put certain items on higher import duty list. Hopefully that will give protection to domestic industry and we will be able to swing trade balances little bit in our favor from current level. The third thing is related to investments. Now here we need to execute what is the intent in the budget. Three important things which came in budget. One, there will be no criminal liability for civil act, not only across Companies Act but also across other acts. If this can materialize in real life, that will be fantastic. Second, strengthening enforcement of contract. In any business, one has to honor words, commitment, and the contracts or the agreements. In India, in the overburdened judicial system, many a time contracts are difficult to enforce. Now, if we can strengthen that like IBC, I think that will be again fantastic. Now, all these things will encourage business over a period of time if intent is converted into action. The third and the most important thing in the budget is charter for taxpayers. Now, clearly, many businesses have talked about tax harassment, tax terrorism, and whatnot. Now, if there is a fair way of collecting taxes, then I think businesses will flourish. Obviously, to revive investment, many things are needed apart from all these things I mentioned, and that has to be done outside of budget. I hope and pray that government, RBI, and other regulators will ensure that anything which is required to help entrepreneurs grow business, revive investments will be done. On the consumption side, budget has done certain things. Now, obviously within the revenue constraints and after taking ambitious target of 2,10,000 crore on divestment, more than 1,30,000 crore on telecom revenue, whatever they could do for supporting consumption they have done. But clearly outside of budget also there are ways and means of supporting consumption. So my feeling is that overall budget within the constraints have done. People's expectations were higher, but they should continue doing or fulfilling those expectations outside of the budget.
Do you feel all this changed the market dynamics a bit, or do you feel the trajectory that we had charted out for ourselves pre-budget continues now?
I think the market trajectory will be influenced not only by budget but also by global factors. On Friday, we had seen Dow Jones correcting. Today, we have seen China taking aggressive step to stop the decline, including not allowing short selling, including putting brakes on what can be sold, including pumping $172 billion in their banking system. Despite taking all those corrective action, when I last saw in the morning, Chinese markets were down about 7.5% to 9%. Now, this coronavirus scare is real. It's impacting Chinese economy. It's shutting down businesses there. There are innumerable linkages for that businesses by supply chain into various parts of the world. Clearly, global growth will be at a risk. And as global growth slows down, our markets cannot remain immune from it. So our markets pre-budget and post-budget, I think post-budget it's factoring in far more scare from the coronavirus.
Nilesh, good morning, Neeraj here. So what would your belief be? I mean, because one works with hypothesis, and let's work with the hypothesis that the coronavirus scare will, yes, slow down GDP and so on and so forth for some time, but not be a permanent scare. The resultant impact on crude, the resultant impact on how India is largely been a domestic oriented story, etc., etc., etc. Does all of that weigh in, or for now those theories are on the sidelines?
Neeraj, people will be driven not only by fundamentals but also by sentiments. Now imagine a foreign investor who is sitting thousands of miles away. If he's taking money out of China, there is one possibility that he would like to redeploy that money somewhere in emerging market, and then India becomes the preferred choice. In this budget, we have rolled out a red carpet for sovereign funds, whereby any of their investments in priority sector investments or infrastructures will be completely tax-free from interest, dividend and capital gain point of view. So if there is reallocation from foreigners from China to India, that's a fantastic thing. If MSCI and other indices company takes into account restriction imposed by China every now and then, they did it in 2013, they are doing it in 2019, and decide to cut weightages of China in MSCI index rather than increasing it as they had announced earlier, there will be redeployment of flows to India. And imagine MSCI threatening to reduce India's weightage when NSE stopped sharing feeds with Singapore Exchange. Here China is actually restricting you from selling your stocks and taking away your money. But let's see what MSCI does. Now on the other hand, if there's no redeployment of money and there is general risk aversion, and the foreigner says that let me take some money out of emerging market, then India also suffers despite no fault of theirs along with China. So the situation will be very fluid. It will be very difficult to take a call today how it's going to shape up in the days to come. As situation evolves, reactions will come.
Yeah, well, okay, maybe that's a better way to approach this. Just wondering, Nilesh, just taking this conversation back to budget for a bit. Since you mentioned that point about how sovereign wealth funds and the investment red carpet being doled out, do you reckon the theme of this budget in large portion also has been that let's not try and go out after what's been done in the past or done beyond the budget, which is give dollops to consumers, but give them just a wee little bit via these tax changes if it materially means anything, to be honest, and the whole market is still confused about whether it does or does not, but give very little to the consumer, but try and make the landscape easy for foreign money to come in and invest into large-scale infra projects, because frankly India doesn't have the money or the rates to be able to do that. So make that easy, and the fructification of that might happen after 6 to 9 months. Has that been the central theme of sorts?
No, I don't think so. Government has the luxury of favoring one versus another. As I mentioned earlier, you have to pull all the 4 levers of government expenditure, consumption, investment, and trade balance to pull your economy forward. Similarly, for investment, you require domestic savings as well as global savings. If you rely only on global savings, it has its own consequences. If you rely only upon domestic savings, you may not be able to achieve the desired growth rate which you have. So the government does not have a choice. They have to be fair to everyone, domestic investors, global investors, domestic entrepreneurs, global entrepreneurs. They have to push all the levers on government expenditure, import and export trade balance, consumption, investment. They have to pull all the levers in order to ensure there is fair growth.
Nilesh, does investment into specific pockets, do you feel that the mindset changes now? Consensus view was the corporate-facing private sector banks up until now, which were the theme of investment. Prior to the budget, the emphasis was on whether or not infra will start seeing more money pouring in, whether if something's done for real estate, then real estate stocks will do well. Anything of that sort in terms of a theme that changes what the year looks like?
I think by the time we arrive at the conclusion, what changes have happened courtesy budget into the valuation of a company, market would have already adjusted. We saw that in a tobacco company, where prices got adjusted far before anyone could, take a view based on the budget to invest. So budget for us is it's a, how do I describe it? Budget, we really can't factor into our calculation. We have to invest on a longer term basis. Not only this, but there will be many more budgets which we'll have to face in our investment journey. Budget does not necessarily change your investment outlook unless until there is a very, very different proposal. Even in that tobacco company, pre-budget, one could always expect some sort of price hike happening. So one does analyze budget, but it does not really change your investment outlook. Your focus is far more on a bottom-up basis with companies, their management, and how do they tackle the changing situation.
Nilesh, just one quick clarification that I would need from you as also the head of Kotak MF, as also from a position in AMFI. On the TDS on income, about rupees 5,000 from units of mutual funds at the rate of 10%. Can you give us some clarity about this, and would an AMC be deducting the tax at source and then passing on the numbers, and of course anything else that you believe impacted AMCs, because this whole talk of how this personal tax changes might impact ELSS schemes as well?
So undoubtedly, we believe if people opt for new tax regime, whereby they give up their exemptions for a lower rate, then their incentive to invest in ELSS goes away. But at the same time, appeal of mutual fund for a customer from their retirement point of view, from their other investment purposes, continue to remain robust and valid. Our feeling is that there will be marginal impact on ELSS flows, because we never only provided tax benefits, we also provided reasonable return on a customer's investment. We provided reasonable solution for their financial need. Coming to the dividend on mutual fund, the current reading of the scheme of the regulations suggests that this is applicable only to the dividend, and any dividend declared by any of the mutual fund scheme, be it debt, equity or hybrid, will have to withhold 10% tax, and the payment to the investors will be on a net basis. As of today, our understanding is that this is not applicable to capital gains. This withholding is only applicable to the dividend.
All right. We leave it at that, Nilesh. Thank you so very much for joining us. Really appreciate you taking out the time this morning.
Thank you.